Crystal here, baseball card collector, investor, dealer, in that order. Welcome everyone. Hope you're having a lovely day. Before I begin, I want to thank Dustin from the Personal Finance Dad for having me on his show last week. It was my first ever live appearance, so I was pretty nervous about it, but it was a lot of fun, and Dustin's is clearly a great guy. He has a fantastic channel, tons of great hobby topics. So if you haven't already, go check out his channel. I've included a link in the description below. So one of the first ever videos I posted to my channel all the way back in March was just a quick story about one of my dealing blunders regarding some Steph Curry cards. And I wanted to relive that story, not because it's one of my biggest all-time losses. I technically didn't even take a loss on it. And I do have stories of deals where I took big losses that I'll share at some point. But this one was particularly important to me because I learned a very significant lesson. And it's a lesson that I still implement today in my dealing strategy. So in the first half of this video, I'll just sort of relive that story and give some financials on it. And in the second half, I'll explain the lesson and how I came to be and how I use it today. So it was 2015. I don't know the exact date, but it was late 2015. I had just bought a bulk deal that was all basketball and football, no big dollar cards, but tons of star cards, base cards, lower end inserts. 50-cent, $1, $2 type stuff, with as high as up to maybe $5 or $10. It included 10 2009 Topps Steph Curry Rookie cards. They were ungraded, but were basically mint. At the time, the card was selling for about $5 raw. Hard to believe, but in 2015, a basic Topps Rookie just wasn't anything special. Kobe Bryant's were maybe $5, Kevin Durant $10, and players like Shaquille O'Neal would sell for $1 or $2. There was basically no reason to consider grading them. You'd probably lose money or at best break even if it came back a 9, and you'd make some money if it came back a 10, but really not enough to be worth the hassle. So I didn't really think anything of it other than that Golden State was off to a really hot start and Steph Curry was completely lighting up the league. The card jumped overnight from $5 to about $15. And that might not seem like much now, as we saw moves like that in 2020 regularly. But in a normal year, for a card to triple overnight, that's actually quite rare. So I remember thinking at the time, $15 for this card, that's just too high. Kevin Durant's Topps Rookie is $10. LeBron's Topps Rookie at the time was $25. I mean, I know Curry's really hot right now, but he's not going to go higher than LeBron. So I listed them in my eBay store all at once for $25 a piece, or best offer. Within a minute, one of them sold for $25, and then shortly after, like within an hour, one buyer bought the remaining 9, all at $25 a piece. No offers put in, just paid my full $25 list price. So I sold all 10 of them for $25 each, $250. That's 5 times more than I was expecting to get. A few months later, Golden State was having the greatest regular season in NBA history. And Curry was the hottest player in any sport in years, and his Topps card was selling for well over $200 raw. PSA 9s and 10s jumped to much higher than that, and today it's a $500 card raw, and PSA 10s go for around $5,000. Here's the 5-year chart of the value of the card raw. I had to approximate this as I couldn't get hard data going back 5 years, so this isn't exact, but it's certainly close. This move is during the year when the Warriors and Curry were having an all-time record season, and this move is the 2020 boom where basically all star rookie cards did something similar. I got the cards here and I sold them here. But I only want to focus on the first move. Obviously, in hindsight, I should have just held them for 5 years and sold them up here, but that's not reality. There was no reason I would have made that decision back then on a $5 card. Foreseeing 2020, I mean, no chance. And timing the market like that is just not realistic. So I don't even see this part here as a missed opportunity, but I do want to focus on the first move because that's where the mistake was made, where I can realistically say I should have played it differently. So this is the 7-month chart from November 2015 to June 2016. Again, this is approximated, but I'm sure the exact numbers are fairly close. I got the cards here and I sold them here. Again, in hindsight, it's easy to say I should have just held them and sold them way up at the top. But again, timing the market perfectly like that is not realistic. I had no idea the chart would end up looking like this. Remember, when I sold them, the only info I had was this part here. Anything could have happened at that point, and it's not realistic to have predicted the crazy upward move. It can just as easily be the case where you should actually sell a card after a 3x or 4x or 5x move, because if you don't, it will drop suddenly and you missed your window. Often when you own a card and it shoots up in value, it can be really difficult to decide what to do. Do you sell it and take some really nice profits, or you could, but you also might be missing future profits as it might have just gotten started. On the flip side, do you hold and hope it keeps going up? You could do that as well, but it might also hit the ceiling and quickly correct itself, plummet in value, and suddenly you've missed your window to cash in. So the decision is often a really tough one, and you really only have these two choices, so it can be basically a 50-50 coin flip. But I didn't have just one card, I had 10 of them. This gave me a lot of options, and I could have hedged my bets if I had played it well, but I obviously didn't, as I treated it as a sell all or hold all situation, and this was a major boo-boo. Selling the card at $25 was not the mistake, but selling all of them at $25 was. What I should have done is sell one at a time as it was going up. Put one up for $25, it sells instantly. Okay, let's try our second one at $40. A week later, sold. Okay, let's try the next one at $60. A couple weeks later, sold again. At this point, I would have made $125 and I would still have 7 left over. Well, it's now a $60 card, so I might rethink the grading situation. Let's say, for example's sake, I evaluate those 7 and 4 are potential 10, so I send in those 4 for grading. I now still have 3 raw ones, so I just continue selling those. Put one up for $100, a few weeks later it sells. All right, $150. 2 weeks later, sold. I now have one left. Let's go crazy. It's basically gravy at this point. $250 a month later, sold. Meanwhile, it's now been a couple of months and my PSA order comes back. In those days, PSA was not backed up, so a standard order might take 2 or 3 months. Let's say, for example's sake, I get an 8, a 9, and 2 10s. Well, what I would have done at that point is probably sold the 8, sold the 9, and sold one of the 10s, and put the other 10 into my long-term investment collection. This is approximately how I would have played the situation today. The overall yield would look something like this. Sold one at $25, sold one at $40, sold one at $60, another at $100, another at $150, and another at $250. The PSA 8 would have fetched around $200, the 9 around $400, and the 10 around $1,000, meaning I would have made over $2,200 if you consider PSA fees and selling fees, let's call it $2,000. Plus, I would have been holding a PSA 10, which, as I mentioned today, goes for around $5,000. This whole scenario is obviously a lot better result than the $250 I actually got. The reason I like playing it this way is because you protect yourself in both directions. I was taking profits along the way, but keeping enough that if it continued to spike, I wasn't going to miss out. On the flip side, if the value had suddenly hit a ceiling and turned and plummeted, well, I would have at least gotten some nice sales in it and not missed the window entirely. Let's say when the card was $150, Curry got hurt all of a sudden and the Warriors just started losing. The card quickly plummets in value. Well, at least I got some solid sales in there close to the peak and didn't miss out entirely. So learning from this example really helped me develop part of my dealing strategy. When investing in someone short term, I actually prefer to have more less expensive cards than just one big one for the exact reason from this example. Let's say you have $500 and you want to invest in a player, you think they're undervalued, or you think they're going to have a good season for whatever reason. Well, if you just buy one $500 card, you're very limited. What if the card goes up to 600? What do you do now? Do you sell and take a small profit, or do you hold, hope it goes up further? What if it drops down to 400? Now what do you do? Do you bail, cut bait, and sell, or do you hold, hope for a turnaround? A lot of times these aren't very easy decisions to make, and those are your only two options. But if instead of spending $500 on a single card, you buy, say, 10 cards at $50 each, well, now you have a lot of options, and you can play it in a variety of different ways depending on what happens with the price over time. So that's it, the story and lesson of my Steph Curry boo-boo. Hope you enjoyed. Please thumbs up and subscribe if you did. As always, I love hearing comments, questions, follow-up questions, your thoughts on the whole situation, whatever. I appreciate everyone watching, and have a great day. Thanks, guys.